All right, guys, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Monday, October 1st. Just a little while ago, I sent out a couple trade ideas in one video. So I'm not going to discuss that. I want to talk about the overall market. I'll talk a little bit about the trade ideas, but that's a previous video, and you can go over that a little bit in detail. So that was just a quick 5-minute video, too, where I think the strength is in the market. Let's start with the major indices and how we kind of started the day a bit. These days are tough. It doesn't really matter what the news is on the tape. When we start the day and futures are bid up like they were pre-market, it is not a recipe for a great day. And I don't know if there's just a little bit of investor psychology in that with the institutions. They seem to be just taking profits where they can when we're bid up like this. And, it's just been a pattern that's been going on now for, I don't know, at least a few weeks. So, that is what we talked about pre-market in the trading room, was to do what you can to take profits on some things where you've got some decent gains, and then you can kind of reassess and go from there. And then the other thing is, swing trades. I'm more of a swing trader. I do from time to time. We'll day trade more where I think there's opportunities, where I think that we're kind of, beaten down and so forth, and I think things could really move up. And we're obviously not in that environment right now. So I continue to look for more swing trade opportunities, but you have to be careful about where you're establishing your positions. There are so many fake moves that we see in the morning, and I'll show a couple different charts, but for the majority of names, and I would say especially in the growth area, you're seeing a couple green bars for the first, obviously today we were bid up pre-market. You see a couple green bars, and then just the bottom falls out. So it's really difficult to add those swing trades. And other days that we are seeing, it's the lunch, it's like the lunch hour sell-off, and things kind of revert or reverse, between 11:30 till 1 o'clock. So the best thing I could say for this pattern recognition is, you can nibble a little bit on some trades for swing trades and starting a position midday, but really you just and I think in this market, you just can't chase starting those trades till the end of the day. Remember, the end of the day, you get so much more information. You know what the volume is going to be. You know if you're going to close on the highs in that particular name. In the beginning of the day, you don't know anything really about how that candle is going to wind up for the day. So that's what I've been trying to do, and it's it is a little bit of a tough mental exercise, really, to say, hey, I'm not really going to trade anything all day long, and I'll wait till the last 15 minutes or the last hour of the day to really put those ideas into enactment. But I think it's much better than starting a trade where a stock's up 0.5% or 1%, and then the stock ends up down 2%. I mean, you lose 3% intraday by doing that. So we'll continue to monitor that, and not to say that that's going to continue forever, but right now that's the environment that we're in right now. So I wanted to start with the diamonds. Sometimes I start with the worst and then I go to the best. But I'm going to start with kind of the best and then go through the worst. So today is the first of the month. What do I know from my experience as an institutional trader? There's a lot of changing around of portfolios. I know there's one particular fund. When I used to trade ETFs institutionally, there was one particular fund that would come around, and they were allocated not even in single stocks. They were allocated in ETFs between small caps, mid caps, large caps, and bonds. And every first of the month, and sometimes they would do it on the 15th, but for the most part, they would do these trades where they would change around their positioning, and they would do it all in one day. So even no matter how large the trade was, they would still get the thing done in one day, and it would have market impact. So I think that's what we saw in some of the major indices. So let me start with Dow. Looks great, right? It actually gapped up and closed close to the highs, up close to 1%. Same thing with SPY, maybe not as good, but actually you have a red bar for SPY. I was looking at S&P futures before, which I think had a green bar. It did. So you can look at it this way too, up 40 basis points. I don't know, glass half full or glass half empty when you look at SPY, which is a red bar. But in any event, they're both up about 35 to 40 basis points and above the short-term moving averages, so there's not really much to complain here. Maybe a little bit about the intraday activity. So here's where it starts to get interesting. When you look at the Qs, they did finish up 20 basis points. They're still above the short-term moving averages. It's just again, it is very your P&L may be significantly different depending on where you put your trades on and where you took profits. It could really make or break whether you made money today or whether you lost money. And then I think, which everybody seems to know right now is what the hell's going on in the small caps. Down 1.3% today, really took a beating and accelerated, I would say, towards the end of the day, which, again, wow, I'm not sure if that's right. I'll check futures, but that could just be a bad print or something else. Yeah, it doesn't look like futures have that print, but you could see the acceleration come at 3 o'clock when I guess somebody's probably finishing up their order to sell over the day. But yeah, I mean it is and if you look across different names, I think IWM, well, it looks like right on the open started to sell, but again, I don't think that is right. But yeah, I mean, I think there's something going on here. So we could look at a couple other charts, but same thing if you look at microcap stocks, so really small cap stocks. And this is fully breaking down as well. Now you do have a version point of control. And if we look at this 103.60, I would say the good news for IWM, and I'll draw this back out to the daily chart, and I'll go over the support there. But if you look at IWM, I always like to look for what's called version point of controls, because sometimes price will go ahead and seek them out. So you have to actually, on our study that we have, you have to actually look at the 180 day, and I'll wait for Thinkorswim to adjust to this. But I do believe that there was a VPOC taken out here. And there it is, boom, right there. So there's no more behind that on the 5-minute bar, at least that I see. But look at the reversion. So this is really good for, if you wanted to play a reversion trade, you could wait until that. I would not put that trade on until that VPOC is taken out. Or if you're taking, if you were short IWM today, that's your place to take profits. So again, that's my study. That's what I use. This video is for information purposes only, but they are really good for watching, for these levels that once we get out of range, where could we possibly get to? And again, the thinking behind these purple lines, version point of controls, is that's where there was previously a decent amount of volume before. And if I could see if I could find out where that originated from, I don't think Thinkorswim is going to let me do it. For whatever reason, I don't know if it was the latest release. Well, there it is. I think around 166. Right? Where did we close? 166. It's so difficult. They don't let you zoom out to see the whole picture, which is really frustrating. And now Thinkorswim doesn't like that at all. Yeah, there it is. So this was back here, 166. So that's that VPOC being taken out. So notable. So we'll see if IWM actually gets a little bit of a bounce, but I would be very wary just about what's going on in this space. If you look at the relationship, and I'm borrowing this chart a little bit from Helene Meisler, who puts out some great information on Twitter, but what I did was put an RSI just to see if this relationship is overbought. So this outperformance, which again, I think this is just symbolic of a pretty crazy market, how this has been working. We go from streak to streak and very little chop in between. This was the end of February. This is where the small caps really started to lead large caps. And then they just flipped on a dime. Notice they got overbought in June. Maybe a little bit of a check back here, but since then, and look at the move the last 2 months. So I don't know, try to not that you need reasoning behind this. It's better to pick up on the price action than it is to the afterthought on it. But, maybe this is when the trade war started to escalate, and this is when it started to diminish. And clearly we had a trade deal with Canada today, and, that's coupled with, maybe a reason to get out of a little bit of companies that have more of their borders here. It could also be a little bit of a combination of, I'm not sure if I buy into this theory, but interest rates moving up too, which is a little bit of a fear for small cap companies as well, taking on a higher rate. Maybe they have more floating rate debt. I don't know. But clearly, if you look at what's happening with bonds, which I mentioned, was sometimes this particular fund that I'm referencing, they actually trade out of bonds as well. And you look at what happened with TLT today, and there was no safety bid there. That closed right on the lows of the day. And you could see that the rates now, the 10-year is at 3.08, so that is moving higher as well as the 30-year. So we are starting to see this move take place. We had a very weak bounce last week in TLT, so we can bring up the daily chart there. But maybe that is awesome. It could be a combination of things. It could be somebody thinking, "Hey, I want to get out of IWM because I don't need to have companies that do most of their business now in the U.S." So that leads to the first of the month flows and say, "Hey, I'm going to reallocate out of small caps and go into something else." But yeah, we're getting pretty dangerous. We're back to this support here in TLT, and it almost looks like we're breaking. So again, pretty weak bounce last week, and we're back to the lows. Notice this was the last VPOC taken out, which has already been realized. So we could be going down to 114.44, and I think I've mentioned that the last time that we got down here. If we continue to take this level out, I would watch that 114.44, and you're going to see probably at that point a ton of articles and financial coverage about interest rates going higher. So just be mindful of that. But yeah, I mean, I think that's definitely something to watch, and you can change your positioning to take place because, if we break it down by sector as well, you could see that the sectors that really got beaten up were, a little bit more of your growthy areas. Keep in mind as well, what is also the largest weight in small caps is financials, and they're completely breaking down. So, KRE was down another 1%, no bounce whatsoever. Had just was down one of the worst perfectors. One of the worst sectors last week was the banks, and they're continuing to break down. So they could be headed to this 56.5 if they break this support down here. So worst performing sectors, a lot of healthcare, which has seen a lot of inflows. So if you're a contrarian, and sometimes you could use my ETF fund flows that I send out daily, when there's too much money going into one space, which there's been an awful lot of money that's been going into healthcare and biotech the last couple weeks. FBT saw a big inflow, but sometimes they get it wrong. The timing is there's too many buyers, and once all the buyers run out, this is an interesting one. This is PSCH, bearish engulfing on this as well. And that could be headed down. That now broke the 50-day moving average. So that's your small cap healthcare. Your large cap healthcare looks a lot better. That is a gap up here. I think J&J, this was a name that I highlighted earlier in the day. I know I see a bunch of other people now sending out charts about J&J, but I was on top of this earlier today. This was up 1.1% today, and we looked at some options. So this was one of the trade ideas I sent out. Also CSX, which again, so a little bit different. So you don't have to be in all those growth names. You can pick and you can reallocate just like this. But we've seen the rail names that have been pretty hot for the last couple months. CSX, was the one that made the move first, but has been really digesting here for the last month. So I like this a lot, and I put on a trade today in CSX. Also the energy stocks, right? I mean, this would be nice if energy gets going, and maybe this would be the next hot area. Certainly this XLE has just been going sideways. It's now getting close to the top of the range. We didn't see, a lot of large trades that went up in energy today, but we are seeing some what I call nibbling. Right, there was some CRC that went up today. There was some APC, which I like this chart the best, the APC, and I actually put a trade on here as well today. So that's APC. It's been moving a little consolidation here, and then boom, move up there. This is small stuff. There was some Hess calls as well, But clearly they're moving. So it's not just really the option flow. It's look at the volume, right? I mean, the volume is very strong in these energy names. The option flow can sometimes be very speculative, and they're riding momentum. The positioning I think is going on is has been going on in stock. So those were your best really energy was the best. Nat gas names also did very well. Material names were up 1%. The industrials, Boeing, this was another name that I sent out in the weekend newsletter. Boeing and CSX were two names that I had pointed out. I'll show you some of the other names that I pointed out too. They're just, I don't mind sharing the ones that are not working out. We want to review them and we want to figure out what's going on with them as well. But this Boeing looks terrific, right? Closed right on the highs today after this big consolidation. I would watch for Boeing to continue to go higher this week. Okay, so what didn't work in my newsletter? Well, I talked about how FDN is coiled, right? This is the Internet ETF. Again, Frank, David, Nancy. So Amazon, Google, PayPal's in here, Twitter's in here. So it's pretty coiled. You've got your 5, 20, 50-day moving average all wrapped around one another. So that usually means a big move is coming. Now, it doesn't necessarily mean that the big move is going to go higher, which originally what I thought, and I put out in the newsletter, because that's usually the way it works. We usually see a run into earnings, which are coming up in a couple weeks. But maybe it's not going to work that way. So I would watch this lower range. The value area, you could see how tight this is for this month because of the coiling that's going on. So watch 140 and 143. And I would not be shy to if the market is going to move quickly in one direction and with this coiling, and if it's going to break down, I'm going to participate in shorting. Why sit on your hands and be angry if these things start to really roll to the downside? Now, we haven't seen that signal formulate yet, but we're seeing, I think, more breakdowns in some of those growth type areas. So for now, we'll have to kind of wait and see. But it looks like things are beginning to change again. And this rotation that we've seen out of the growth names, this has been happening. We saw this a couple months back, right? I talked about this big rotation into it's IWD is the one that saw the money go into it. This doesn't look great because there are a lot of banks in here as well. But, there has been some days where really volume picked up, going into this and going out of things like IWO and IWF. IWF actually doesn't look bad. That's large cap growth. But IWF, small cap, looks pretty ugly. Excuse me, IWO. So, be alert for this because it's not right now, and this could change as well. But previously we've seen where the whole market gets sold off, and it's a move out of just risk assets and into bonds and something like that. Here it just seems like things are continuing to kind of rotate around. So you have to be on the right side of the fence. And we'll see if we get follow through with some of these areas being unwound. Again, the one thing that's nice is the first of the month trades are over. They only do that trade mostly on that day, and then they position the way that they want to be. So we'll see if they're positioned the correct way. All right, guys, thanks for watching today's a little bit longer than normal video. Have a great night. See you tomorrow.